Hello, good evening. Welcome here once again. Welcome to this channel. And today we'll be talking about the candlestick pattern, the candlestick at large. Before we move to the candlestick pattern, we'll be talking about the candlestick. What is a candlestick? Candlestick is the language of the financial market. It is the best form whereby the market is being analyzed. It is a visual representative of all information that comes into the market. What the bulls and the bears are doing. The candlestick explain this to us. It tells us this information. It carries all the information we needed in the market. Yes, the candlestick comes in different forms, in different body, and different shapes, in different heights. You can have a candlestick like this. You can have a candlestick of this range. A candlestick can be like this. We can have a candlestick as this. You can have this. You can have this. As candlestick, they are all candlestick. What are they telling you? Based on the section, based on the time frame you are using, probably let's give you an example of a 1 hour time frame in this trade. In this example, and throughout today, I'll be using the 1 hour time frame now. All of this can be 1 hour time frame, and they will be different in body shape, they will be different in their sizes. What happens? It's telling us per session in the last 1 hour, this is what the buyers and sellers are doing in the market. The bulls and the bears in the market, this is what they are doing. That means in the session, that means in the hour, there has been a fault up and down from them. The bulls take it up. That's the buyers, they take it up. The sellers what? Brought it down back again. And here, this is telling us any of them has a strong momentum. It might be the buyers, might be the seller. We will explain more now how to identify if it is for the buyers or the sellers. To identify a candlestick, to understand a candlestick, probably is a bullish or is a bear candlestick. You can use two forms. Yes, two forms to identify. The first is the open and close of the price. The open and close of the price of each candlesticks. If you look at your trading view, if you click on a candlestick on your trading view, up of your trading view, the informations, the database of the candlestick will be highlighted. You will see something like this: the high, the low, the open, and the close. It might not be arranged this way, but these four will definitely be there, which is the high, the what, the low, the open, and the close. Now, obviously, this is the what, the low of every candlestick, and this place is the high of every candlestick. Okay, let me just do this example. Let's have two candlesticks here. This is the low, this is the high of the candlestick. So you will see the price there, the low and the high of the candlestick. Now the open and the close. For the bulls, the candle, you can say a candlestick is bullish. The candlestick belongs to the buyers when the open is below, the open price is below, and the closed price is above. This will be the close price. The close price is above. It opens from below and closes above, which belongs to the buyers, the bulls. And for the bears, is opens above here and closes below. It opens what above and closes below. So when you click on the candlestick on your trading view and you check up, the open and close price will tell you in this section who owns the candlestick. Who does the candlestick belong to? Is it the buyers? Is it the seller? And another way to know if the candlestick belongs to the buyers or the sellers. If your candlestick belongs to the buyers or the seller, is the color. Yes, there are a lot of educational books, a lot of e-books that does not support this format, does not support this. But this is this. Trading has been long, it has been available for long, and I am not the one, you are not the one trying to bring something new. It has been like that. TradingView has been the best platform to analyze the market. And if you open your TradingView now, if you open your TradingView today now, you pick a currency pair, what you will see there is the what? The popular green and red candle. The green and the red candle. That's what you see on your trading view, the green and the red candle. So the green candle, the green candles, that's the green candlesticks, and the what? And the red candlesticks. The green candles belong to the buyers and the red candle belongs to the sellers. Yes, like I said, a lot of ebooks does not support this. They believe, yes, the color is nothing, because why? You can change the color yourself. You can change it to everything. But most traders, let me say, most traders in the world prefer to go with these colors. So why we disturb ourselves? Why don't just focus on the colors and analyze the market the way you want? It is fine if you want to change your color, you can change it. But when you change it, you know the colors you are changing it to. You can. I probably don't think it will make sense to change to the same color. So then we can use the color to differentiate. Since it's not possible to, it will not make sense to change to the same color. You can't use green for both. Since you can't do that, then it is normal to use the color to identify the candlestick. So that being said, a candlestick, the anatomy of the candlestick has different body shape, just as woman, they have different body type, different body shapes. You can see a candlestick of this nature. You can see a candlestick like this. You can see a candlestick like this. This is a candlestick as well. This is a candlestick as well. In your given time frame, in your 1 hour time frame, all of this is in the 1 hour time frame. This candle is a candle, is a candle. All of this printed in 1 hour. This prints in 1 hour. This prints in 1 hour. Then the question we should ask ourselves now is, what happens? Why do we have different shapes in the same time frame? They are all 1 hour time frame, but they are printing what in different shapes. You can have these too. A candlestick of this nature, you can have this all in 1 hour. This is a 1 hour, this is 1 hour, this one. Probably let me use this. You understand 1, 2, 3, 4, 5, 6, 7. That's 7 hours candlestick, and they are different in body shape. What happens? The candlestick represent what the buyers and the sellers are doing in the market at that period. In the last 1 hour, probably we are current in this current 1 hour. So in the last 1 hour, someone has won. The market very strong. One of them is strong. Is it like the buyer or the seller? If you see, if the price opens below here and close above, it is the buyers that won. If it opens above, close below, the seller wins. But now let us use the color. If you could see a green candle stick here, that means the buyers are stronger in the market in this last 1 hour. If this is a green candlestick, the buyers are stronger in this section as well. Though the buyers actually take it here first, the seller bring it back. The seller also try to take it here, and the buyer bring it back. But at the long run, who has the color? The body is actually still bigger than these shadows, these wicks. We call these shadows. These are the long tail. They are called shadows. The body is still bigger than the shadows. That means someone is still a little bit stronger. Yes, it is not stronger. It's not stronger as this, but at least still strong. Same thing as here. The color will tell you who won the battle in this 1 hour. Who is stronger in the market in this 1 hour. Do you understand that? Okay. So, since we have different candlestick patterns, and candlestick represent to us what? what the buyers and sellers are doing in the market. And as a forex trader, our main job is to what? Is to buy and sell. And we buy what? We buy when we know the price is about to go up. We sell when we know the price is about to fall. How do we know this? It has been explained during our session with support and resistance that you can know this through your support and resistance. For example now in a trending market, is that we have an uptrending market. Probably you have connected your support your trend line. Also, your support and resistance has been in check. You want to buy from here. You want to buy from here. Do you get that? You want to buy from here. The market will not be representing this line. It will represent a candlestick. The candlestick will tell, okay, now, if you want to buy from here, let's use another example. I want you to get this right here. If you have the first touch, the second touch, then we have your support and resistance. You are waiting for the price to come. Okay, currently the price is here, right? You're waiting for the price to come down from here to here. Then you can buy up. And like we said, candlestick is what? Is a virtual representative. It's a candlestick that will represent this to us. The candlestick will represent this to us. That means the price needs to what? To fall to this certain point so that you can buy, so that you can make money. Now, the candlestick start coming towards you in this form. What you need to know here is, you need to know here that the sellers are strong. Can this zone hold them? Can this zone reject them? Can this zone stop them? That is the question. You have the zone already. You have the support zone here. You have the resistance zone here. You are expecting to turn to support. So you have your resistance here. You are expecting to turn to support. You have a third touch of your trend line. The first or second touch. You have a third touch of your trend line here, which has given you a true confirmation that you want what? That is, market should buy. Now, you have to wait. The council must tell you, yes, the sellers are weak. The buyers are truly ready to buy. But if the candlestick is telling you the sellers are no, they are still in power, you just have to let them be. You just have to let them be. So that being said, we go to what we call the candlestick pattern. The pattern that tells us, yes, a reversal is about to happen. You understand? We need a reversal here so that you can what? They are coming this way. That means there must be a reversal to go to this other side, which what you need to buy. The candlestick patterns are the ones that tell us what there's a reversal very soon. The reversal is coming soon to the market. They're telling us a trend is about to end. This trend down, this falling down is about to end. These sellers are losing their power so that the buyers can take control. The candlestick only the candlestick has the power to tell us when the buyers are is ready to take control, when the buyers will take control. How do we know this pattern? So this leads us to the candlestick pattern. The candlestick patterns. This is also the candlestick patterns. We have several candlestick patterns, a lot of them. If you read online, a lot of them. But to myself, I love these 6 of them, and I use them a lot. I love these 6 of them, and I use them a lot. These are the 6 I will write down here and I will be explaining in the course of this video. But there are a lot of them online. You can check, you can read about them, understand them. Probably the pair you choose, love one of them, shows one of them more. It's fine. So now, the first one here is the engulfing pattern. The engulfing pattern. The engulfing pattern. Then we have a doji pattern. The doji pattern. Here we have the star pattern, the stars, which is a money and evening star. Morning and evening what? And evening stars. Evening, please, evening. Then we have the hammer pattern. The hammer, we also have the shooting star. The shooting stars pattern. 1, 2, 3, 4. Okay, we have the harami pattern. I hope you can see them. We have the harami pattern. Then the twice top, twice bottom and top pattern. You get to see them clearly when we explain them one after the other. These patterns occurs frequently in our chart. It occurs in the market a lot. These patterns are to be taken. They are very, very important. They are to be taken essential. Like they give you the right information you need. They tell you when the sellers or the buyers are losing control, and also when the buyers or the seller are taking the control. Someone has to lose the control and someone has to gain the control to what? To reverse to the pattern, to the part you want. So let us explain. During the course of explanation, you get to understand it better. So let's start with the what? With the engulfing bar. With the engulfing pattern. As the name has what? As implied, it is engulfing. That means a candlestick must engulf the other. So we have two types of the engulfing pattern. We have the bullish engulfing and the what? And the bearish engulfing. You understand already the bullish means the buyers. You understand the bullish engulfing, the what? The bearish engulfing will meet the seller. The bullish engulfing, the bearish engulfing. How do we identify the bullish engulfing? How do we identify the bearish engulfing? The bullish engulfing. Okay, let us write it in full. The bullish engulfing, we can sell the bullish as engulf in the particular market when what? When a bullish candle, when the buyers candle engulf a seller's candle totally, like it engulfs totally. And to have an engulfing pattern, it contains of two candles. It contains two candles. The first one, which will be the smaller candle, and the second one, which has engulfed it totally, which is the bigger candle. So now, in this form, the bullish candle example is, we have this example. It involves two candles. You understand? It involves two candles, and this is the example. We must have this, which is the red candle, and the what? The green candle, which totally swallow it, which engulf it. It totally will swallow it, it engulf it. Totally swallow it, it engulf it. And this pattern tells us what? That the buyers, which are in control of the market, and the sellers are losing the control. How do we identify this candlestick? This is simple to identify. You have to look for this candlestick in the what? Below a downtrend market, below a market that is what? That is trending, that is what is retracing. For example, now let me give this example firstly on a trending market. If you have a trending market in this form, if the market is coming to you this way and you have your third touch here, if the market is coming to you this way, so you are expecting the what? The engulfing pattern to show on this zone to zone your shoe. How is it? Let me describe this place here. I'm describing this part here. Now you are expecting what? A retracement to happen, to come to your trend line and also to your broken support resistance zone, which has turned to support here. The sellers, which is the red candle, is coming towards the line, towards your trend line this way. They are coming to, they can come in any form. You don't have to keep being strong like this. They are coming, they are losing momentum, then they are coming. What happened? He has gotten to this line. And you thought, the sellers are strong, they are coming, they are moving towards you in a strong form. Then what happens? A candlestick form, which is the what? The green, the buyers. The buyers candle. These are what? These are the red candle, please. Then a candle just pump up a green candle and what? And engulf this particular candle. Like a swallow this particular candle. What is telling us that? What is the psychology behind this information? The psychology behind this formation is that the sellers are what? They are coming, they have been coming down with their candle, probably stronger, probably weak. They are coming with their candle. And when it gets to your zone, you understand? The what? The buyer comes to the market, engulf the candle. Sometimes it even engulf more than one candle, but at this example, at least it must engulf one totally, fully, to consider it as what? A bullish engulfing pattern. And what is the psychology behind this? Like I was explaining now, the sellers are coming down, the sellers are coming down, the sellers are what? Moving down, the sellers are moving towards your zone. Then when they get here, the buyers take control. What is telling us? It's telling us that the buyers are now in control of the market. The buyers has now take control of the market from the sellers. The sellers are weak. They are weak in the sense of they have this candle, which is a small candle. We thought they will continue going down. Then this green candle pop up and what? And change the direction of the market. It's everywhere. If you check your trading view, and after this video, in the next section, we'll be having to check it on the live chart to see the example on the live chart. So this is what? This is a what? This is a bullish engulfing. And we must look for this bullish engulfing what? At the end of a retracement. At the end of a what? A downtrend. When we have our zone here, we are expecting what? The market to retrace so that we can buy. So what happened here? What do you do here? So since you get this and this closed, remember all these are same time frame. 1 hour time frame, 1 hour time frame, 1 hour, 1 hour, 1 hour. This is 1 hour, and this is also a 1 hour candlestick, and it's what? Engulf this totally. A 1 hour swallowed a 1 hour candle. Understand? This 1 hour swallowed this 1 hour candle. You know what? The buyers are in control of the market. So what you do is what? You buy. Upon this information, you do what? You buy. How to enter, how to exit will be explained later on. What you have to do now is just understand the candlestick. Know how to identify it when you see one. Now let's move to the what? The bearish example of it. The bearish engulfing. Yes, obviously this is direct opposite. It's the direct opposite of what? Of the bullish engulfing. It also involves two candles. One must swallow one. The first one is a smaller candle and the second one will swallow the previous one. It's like this. You can see it's almost just as this the former one, but you will get the explanation now. It's like this, but this first candle here must be the green candle, and the second one here is the red. Like I said, the color does not matter to some people, but yes, it's tradable. You don't have to convince yourself. That's what we use. That's why I use my tradable, and that's what I use in my meta trader for the colors. Instead of checking the price, instead of cracking what price is this one, where did this one close, what this one opens, you can easily use the color. The color does not deceive. You understand that now? So now, this is the example. Now you can see this is a green candle. The red candle swallow it totally. Like the red candle swallow it totally. Let's give an example of this as well. Probably let's give an example having a downtrending market. We have our trend line here, first or second touch. We do what? We have our support here, we expect to turn to resistance here. Then what happens? The market is what? Is coming our way. The market is coming our way. Don't forget this is what? This is a downtrending market. We are looking for opportunity to what? Opportunity to sell. Opportunity to sell. We are joining the seller. So now, but the market will not just keep going down. We are expecting this little retracement so that we can continue what? To sell. You understand? So then the market start moving to our forward, to our way. Now when we move here, how do we know if the market will truly come down, if the market will continue to sell or will continue going up? How do we know that? That's what the market, the candlestick is available for. That's what the candlestick does for us, to tell us. You understand? So now, just like I've explained in the previous one, I'm explaining again here now. This zone is where we are expecting the engulfing, the bearish engulfing. And I will make an illustration of this part now, going to our zone. So what happened here is here. What happened here is the candlestick are going to our zone this way. In any shape they find themselves, they are going to our way this way. They are going to our way this way. Then they get here. So when we get here, they keep going. So we thought probably they keep going and keep going. Then a candlestick form and what? So all of these are the buyer's candle, which is the green candle. We might have a little bit of red in it, you understand? We might have a little bit of sellers, we might have a little of conflict in it. You get to understand that very soon, more and more. So then, the green candle here, then what happened here? This red candle forms in the mighty strength and what? And take it away and engulf it totally. They are all 1 hour candlestick. I'm using 1 hour in the sample of this video, don't forget. So now these are 1 hour, an hour, an hour, an hour, an hour. And what happened here? This 1 hour, same 1 hour candlestick, what takes away this candle totally. What is telling us here? It's telling us that what the sellers are now in power. The buyers have shown their strength here, shown their strength here, shown their strength to get here, shown their strength here, shown their strength here. But when they get there, the seller will show their strength mightily. It's telling us the buyers have lost control at this particular section. The last 1 hour, yes, the buyers are still doing fine. Yes, the buyers are still doing fine here. In the last 1 hour, they are still doing fine. But this current 1 hour that just finished now, what happened? The sellers are in power now. They take control of it totally. They engulf it totally. So when that happens here, don't forget we're talking about this part now. So when that happens here, and you are expecting to sell, don't forget, you're expecting to sell here, and this happens, it's telling you that the sellers are in power. All you to do is what? To sell, to join them, to continue the move with them. Because what? They want to take control of the market. They are ready to what? To take control of this market from the sellers, from some of the buyers, sorry. That is an example of what? Of this. That is the example of this. I hope you can go forward now. You can go now. So the next pattern is what? Is the doji. The doji pattern. The doji pattern is a candlestick pattern that's what? That tells us the situation of the market as that the market is indecisive, that the market is in what? Is in a stage of indecision, is a stage of equality. Example of a doji candlestick is this. like a sign of the plus, a sign of the cross. You'll get to understand it more now. The candle, a example of the candlestick is this. This is a doji stick candle. Irrespective of the color, it's called doji. Irrespective of the color, this is called doji. And what happens there, if you understand, if this happens in 1 hour, just like we have given our example as it to be the 1 hour. So if it happens in 1 hour candlestick, what happens there? It's only like the sellers have taken the market down at a particular time. But what happened? The buyers does not agree to them. Okay, now the sellers also does not what? Also fight the buyers when the buyers take it to this up. Take it to this line, they what? They fight it back. They send the price down. So now they close and the open. The open of the price and the close of the price is in the same place. Is in this section. The market opens in this middle and also closes in the middle. It's telling us what? They are what? They are arranging in the same pattern. They are arranging in what? In the same pattern. No one won this section. Is what? The level up their strength. So now, how do we trade this candlestick? This candlestick, when you see this candlestick on the downtrend, for example, we have experienced, so probably in your retracement, so you saw this candle forming, probably we have the red candles coming up, and suddenly one just formed this way. It's telling us what? The red candle in this 1 hour has been what? Has been taking control of this market, taking control of this market, taking control of this market. They are what? Taking control of this market. But when it gets there, what? The buyers what had a good fight with them. They also fight back. They are the one controlling the market currently now, so they fight to take it down. The buyers had a good fight with them. They take it up. The buyers take it up. They also drag it back again. So that's what we have, this indecision. And what is this telling us? It's telling us a reversal is likely to happen. Why? The sellers that is taking this market down from here, that is making this market fall, selling this market from here, has no power to continue from here. Because what? In this section, nobody won. Yes, the buyers had a nice fight with them and they level up their strengths. Nobody won. So it's telling us what? A reversal is likely to happen. And also if it happens this way too, then it's formed this way too. Well, don't forget, this is what? Coming down, this is a red candle. This can be any color. The doji can be any color. And don't forget, this is what? This is the green candle going forward. This is the green candle. Then this can be any color. But that's why sometimes the color does not matter. What you just need to know now is the psychology behind the formation. How does it form? Why does it form? This is the reason it forms. Because the buyers are what? Are pushing the market, pushing the market, pushing. When they get it, they push it up. No, this is it here. Let me just explain here. You understand? So they push it up. Yeah. But the sellers what? Surprise them by taking this down, even push it down. But they also does not lose the total power here yet. They drag the market back and they close in the same point, in the same strength. So what is this telling us? It's telling us a reversal is likely to happen. For this place, a sell is likely to happen. For this place, a buy is likely to what? To happen. Market is about to reverse this side, or market is about to reverse to this side. So what do you do here now is wait for a confirmation. And after this, wait for a candlestick to take the direction. So that let the buyer take the direction. Then you join them in what? In the journey, you buy. Also here, wait for the direction. Let the sellers take the corner, let another red candle form, a strong red candle form. Then you know what? The sellers are truly the stronger one now. Here is a green candle here. To let you know that the buyer, yes, the buyers has dragged this place to them to have the same fight here, to have the same point. But here, after this information, it has confirmed to us that what we are, thank you. The buyers or the sellers are still control fully. Here the sellers take control fully, here the buyers take control fully. Now this has types. We have types of doji pattern. We have the dragon, the dragonfly doji, and we have the gravestone doji. That's the type we have dragonfly. Let me explain it. So the dragonfly, which we just write as what? DD, the dragonfly doji. Yeah, this is how to draw it. The dragonfly doji. The gravestone doji. The gravestone doji is like this. Probably this. This probably this. It's still telling us the market is indecision, is in a stage of an indecision. It does not even know who to trust, who to win in the market. But this is giving us, when this shows on in the downtrend, it's telling us the buyers are getting stronger. This, for example, when you have the red candle coming towards your zone this way, then you have this. You have something like this, which is the dot, the dragon store or the dragonfly doji. If you have something like this, which is dragonfly doji, then you know the buyers are strong. How do we explain this? What is the psychology behind this formation? The sellers are coming with this trend in the same time frame. Our 1 hour. 1 hour is coming this way in this 1 hour, it's coming this way in this 1 hour, it's coming this way, it also comes here. But getting here, they continue their journey. They get the candlestick down. But for one reason or the other, the buyers drag with them and push it forward, push it up. And even what? The sellers have get the candlestick down here, get it down here, something like this. Then the buyer what? Met it totally to let it close here in this sharp, in this ST. So what is telling us is like the buyers get their strength, gather their strength to push the market back, to take it from the what? The sellers. This is what? This is the red candle, which is the seller's candle. So what happened here is telling us that a reversal is likely to happen. So what we need to do is just wait for the buyers to truly, which is the green, the buyer to truly take control. Then you join them. And this too is just an example as the doji. So we have the green candle, the buyers are doing well, they are doing well. And suddenly they push the market up, and this happened. Which is the what? Don't forget, it's a sample of the gravestone doji. And they push it up. They thought they continue buying, they continue with their strength. That's what we thought. Then what happened? The sellers surprised us, take it down, met everything down to give this long wick. They bring it down to give this long wick. So now after this long wick, what happens? The sellers lose their control. And the sellers take control fully. They take control because the buyers has lost the control. When it happens on your zone, probably you have a broken resistance support that you are turning to resistance here. You have your trend line here, or probably your zone in the ranging market. This is telling us, is giving us a likely reversal. Because what? The buyers are continuing taking control of this market, has lost it. It has just lost it. The candlestick have met down. Also, what happened there? How do you trade is just expect the sellers to come, a red candle to form. to take control of the market. Then you join them to sell. That is that about the doji market, the doji candlestick pattern. So now let's go to the next one, which is the morning star. Good morning. So it's the morning star. The morning star. This pattern consists of 3 candles. The morning star and the evening star, they consist of 3 candlesticks. I think let me do it this way so that we can just get it. The morning, because I want to show this page, sorry. The evening star. The morning star and what? And the evening star. They both consist of 3 candlesticks. 3. Just pay attention to their formation now. Understand? So this is what? Is a bullish pattern, which this is a bearish pattern. This is a bullish pattern, this is a bearish. So what happened here is that the buyers. Okay, let me just draw it. Let me just show us how the formation looks. How it looks now. This is the information. We must have 3 candlesticks to call it the morning star. And this is it. We have a candlestick coming down here. We have something of this nature. Then we have this. And for these two, please pay attention. We have this, then we have this. You can spot the difference. These are 3 candlesticks. So now, this is what? This must be the red candle, which is the sellers. This can be any. It can be any. Is that a red candle, a green candle? And this is what? This is a green candle. This is what? This is a green. That is bias. This up here can be anything. Can be any color. And this is a green candle. This is the red candle, sorry. Omit that mistake, please. This is the red candle. Understand? This is the red candle. So now, this is telling us what? That what? Like I said, it's a bullish. It's telling us that the buyers are what? Are likely to take the market very soon. What happened here is a trend is coming. The sellers are coming. So they are coming with their strength. You can say the sellers are what? Coming with their strength. Then suddenly a little candle is showing us that what? Probably they are losing their momentum already. If this is don't forget this is a red candle. Once we are talking about the seller, so the candle color will be red, right? So now this can be of any color. If this is green candle, it's telling us the buyers are preparing to take the market. That is it. It's telling us the buyers are prepared to take the market. But if it's red, we just tell you if it is a red candle, it's telling you the sellers are still in control, but they are getting weak because they have been doing well here. So why do they get here and have this small candle? So what happens here now is then the formation of this candle happens, which is what? A green candle. Don't forget these are the red candle. This is a red candle. This can be any color. Green, red, it can be a bullish candle, it can be bearish candle. But what matters is it is this theory information. We have the first telling us the sellers are still going on. They have been going from there, so they are still in power. Then it is telling us there's a little bit of slowdown. If it is a green candle, the buyers already is coming in to take control a little bit. If it's a red candle, the sellers are slowing down, the momentum is going. Then this green candle confirms, yes, the buyers is now in charge. The buyers want to take control of this market because the sellers have has trended down here. And the buyers want to take control of this market. I hope you understand that. They want to take control of this market. And what happened here, which is a bearish, that means what happened here is we are having a green candle that has been going, the buyers are going up, the buyers are going up. The buyers are going on with their strength, and suddenly we have a little candle. Sometimes it might be doji, a little bit candle, then we have this push down. The buyers are going on with their green candle in a strong form, going on in this is also a green candle. This can be any color. But what is this is telling us? If this is green, it's also telling us the buyers are still in the control, but they are They are getting weak. They are losing their momentum because they have this. This has been happening with them. They have this. But suddenly, why they have this small? But if this is dodgy, this also tells us indication between them. This formation of this small candle is telling us that something is about to happen. Someone is losing control because they have been taking control with this. They are both 1 hour, same time frame. A same time frame print this, same time frame print this. Then you should know there's something behind it. You understand? Then you know there's something behind it. Something is behind that. So what you now need to do is wait and see what happened there. So what happened there is this red candle forms. What matter is that it must be 3. This 1, 2, 3. So that candle form to tell us that the buyers are taking control of the market. Here they get slowed down. For one way or the other, they lose a little bit of control. And the seller use the opportunity to drag it down. Then what we do here is look for, once this happens, we trust the sellers and sell with them with our proper risk management. I hope you understand the morning star and the and the evening star. And the example we now to use them is when we have this, like I've explained. When we have this, probably we have this. Then we have our zone. We have our zone here. We have our trend line here. So let me use this as candlestick. The sellers are coming down. So upon getting to this psychology level, upon getting to this zone, when the sellers are still coming, then this little one form to tell us that there's a slowdown in that zone, and then the green candle form to tell us the buyers are still control of the market. So it's still the 3 candle, the red, the small one, and the green. This telling us that the buyers are in control now. Buyers want to take control. Like, it's just that you don't need to know the name. You don't need to put the name in your mind. What you need to just know is the psychology behind it. You see it yourself. The candlestick can come this way, 1 hour, 1 hour, I'm using 1 hour like we have explained. Using 1 hour, 1 hour, 1 hour, 1 hour, and suddenly, when it gets here, what happens? A little bit of slowdown happens. When it gets here, the red candles is here, the sellers are still pushing here, and when it gets here, they push just a little. Like that they are losing their strength. But you keep waiting for more confirmation. Will they regain this strength and go down? If they regain this strength and go down, this trade has been validated. But what happens? The buyer takes control. Then the green candle forms here. Then we have this green candle that forms here. The buyer take absolute control. It takes control of the market. That's the psychology behind the formation of it. How does it form? That's why it forms. Because they have been taking control. And what happens? Because there's a resistance here which is starting to support. So this place wants to send the price back. It wants to support. It wants to reject the price. It don't want the price to keep falling. It wants to support it. And also we have the first or second of our trend line. So this is a perfect entry. Yeah. So we join them, we buy. That's it. And for the first or second touch here. You have your support here, which has been broken. So we're expecting to retest to come to resistance. And what happens? The market pushes down here. I'm using this as candle now. Then we have the green candle. You know, the green candles for the buyers raising it up. Buyers are raising it up. Buyers are raising it up. Buyers are raising it up. So when it gets here, the buyers still continue the journey. Well, what are we doing to do? We have to observe. Are the buyers going to take control of this market? Are they pushing it up? Are they pushing it up, or will they get tired of going against us? So now when we get here, what happens? The little candle will form to tell us that the buyers are getting weak, they are losing their control. But are they going to regain the control and go up? We don't know yet. What we need to do is to keep observing, and what happens, so we see what a red candle form. A red candle form here. You don't forget these are buyers candle, so which is the green. So this is a green candle here that form here. This does not. So what happened here? What happened here is just this. We have done it before. The red, the green. The green. A small formation here, and what? The red. What is this telling us? It's just telling us the buyers are in control, they are in control, they are in control. When they get here, they slow down a little bit, and what? And after that, we saw another formation of what? Of the red candle. Even without knowing the name, we just know that what? Something is about to change. This is about to change. At least nobody is interrupting them here to this large extent. There might just be a little bit of push down, they might fight and one thing. But when they get here, they slow down with this little candle. Then what? The red candle form. So that is called the evening pattern, which is also the bearish reversal pattern. It's telling us when this what? The sellers want to take control. The buyers have just lost the control. The seller wants to take the control. That is that about that. So the next one we are going to now is the harami. As we know, the candlestick pattern, or the candlestick is also called the Japanese candlestick. It is formed by a Japanese. It is invented by a Japanese. The harami in Japan means pregnant. Pregnant. That's what harami means in Japan. So the harami pattern is telling us about a pregnant candlestick, a pregnant woman, for example, a pregnant candlestick. And we have two types of harami. We have the bullish. We have a bearish harami. It also contains what? Contains of two candlesticks. Two candlesticks form the harami pattern. And this is it. It is just a direct opposite. Let me say direct opposite of the engulfing. Let me just explain and let you see now. What happened here now is it must be two candles. The first, the second. Must be two what? Two candles. The first and the what? And the second. For the bullish and for the bearish, must be these two candles, the first and the first. The first candle is the seller's candle. The red candle, the seller's. Then you have this to be your own, which is the buyer's, the bullish candle. Is this green? So this here is what? Is a green candle. Then we have this, which is the red candle. What is the market telling us? The market telling us here that what is looking like a pregnant woman. It's looking like a pregnant woman. Probably when we draw it, we will explain better. The harami once again. You can see I did not draw that place fine the other time. The bullish. The what? The bearish. The bullish what? And the bearish pattern of the harami. That is two. So like we said now, this one is like this. Then this. This is also like this. then this, then this. The what? The red candle, the green candle is the big one here, and here we have the red candle to be the big one here, and the green candle is smaller here. So this is it. This is how to identify. This is psychology behind this white form. Is what we are having the sellers coming towards us. The sellers are coming towards us. The sellers are coming towards us. Then what happens? A new candle form this way. The sellers, this is the red candle, the red, which is the seller's candle coming towards our zone. Don't forget, it's a bullish candle. We are looking for it to buy. We want to buy at a particular point. So when the candlestick is coming towards us, we are looking for any pattern that will tell us the buyers have not taken the market, so can join them. You understand? So now we have the red candle forming, the red candle forming, the red candle is forming. Then suddenly this little candle forms inside of this. This is like an engulfing, but in the facing front, which it is called the pregnant woman, which is why it's called the pregnant woman. Like inside it, it must cover it. It must like something protect. It must cover it. But this is a red candle. This is telling us that the sellers are coming. Then suddenly the buyers take control of this. The buyers enter their stomach. They enter the stomach of the what? Of the sellers here. They enter the stomach of the sellers here. This is telling you what? A reversal is likely to happen. Like a reversal is likely to happen to the upside. And then for these two, we have the green candle, we have the buyers going. Buyers are going. And then what happens? We have this, the red candle, which is the sellers representing, and this is what? All these are the green candles. All these are green. We have the buyers going. They have been going. They are going. So all of a sudden, this happens. This red candle forms inside the stomach, like inside. It forms inside the buyer's candle. The seller's candle forms inside the buyer's candle to tell us a reversal is likely to happen. A reversal is likely to occur here. Because what? The sellers are going. The buyers have been going up, and going here and going here. And then suddenly the sellers take control. They open and close inside one of the buyer's candle. It's telling us what? The reversal is likely to happen. Because why don't the buyers take control and taking it up? Also the sellers, why did they lose their momentum here? Let's go further to an example. So this example here is once again using our trending market. First or second touch. What happened here is see this form, see this. The sellers are coming. Then the buyers drop this. I hope you can see that what I've drawn here is just this. That line is disturbing. All of these are red, except this, which is the green. This is green candle. So what is the psychology behind this information? It's just as simple as that. The buyers are what? Are waiting. They want to take control now. The sellers have been making the market come down. The market is already coming. The market is coming towards below. The market is coming. You understand? The market is moving down, and suddenly the buyers take control of this inside them. Inside. You have to be inside it. And the first one is the buyers is taking control, which is the green now. So the first one is the big one, which is the red candle, and the second one is the green candle. That is telling us buyers to take control. So how to trade this is wait for another indication. Let the buyer take control once more time. Let them show a strength. Then what? You join the process to buy. So what happens here is when it goes this place, so it forms this next one, then what we buy and join them in the journey. And just the opposites. Just the opposites for this. The market has happened here. Don't forget these are resistance and support. A support zone that has been broken that want to retest a touch of our trend line. So what happened here is the buyers are going through towards this trend line this way, towards that zone this way. This place is a bit shorter. So they are going this way. There, I'm explaining this place again, please. They are going this way. Then suddenly a red candle forms. The buyers are going this way, going this way. Suddenly a red candle forms, and the red candle must be inside, like inside, which can be referred to as a pregnant woman, like he put it inside of it. And what is that? This is the psychology behind this is the buyers are moving, same time frame, same everything. The buyers are going up, going up, going up, going up. And what? Suddenly they lose control here because what? The sellers take control. The sellers form this red candle and close inside them. So all we need to do here is wait for the further confirmation of a close. So here, wait for a confirmation for the red candle here. Don't forget, these are green candlesticks. These are green candlesticks, you don't forget. This is also green, yes, because that's the first candle. Red. This is also red. That's the first candle the sellers are taking. So this is it. This is a red and this is a green. Don't forget it's a downtrend, so it's a bearish market. We're looking for bearish harami pattern. I believe you get that clearly, and that about the harami pattern. And the next one now, which is last one here, is the what? It's twice top and bottom. And what? And bottom. First top and bottom. So let's do it this way also. So we have the twice top here. We have a twice bottom here. The twice top and bottom are the reversal candlestick pattern too. They consist of two candlesticks as well. So don't forget now we have two. We have the engulfing, also consists of two. We have the harami, which also consists of two. And now we are having this. Let us control of two. But what happened here is the two is equal, almost equal size. They must be equal or almost equal size. They must be equal or almost equal size. This top, the twice top is a what? Is a bearish. Why this is a bullish? This is a bearish. Why this is the what? The bullish pattern. So, and once this is a bearish pattern, you already know what we are expecting here. This is what? This is a green candle. And this is what is a red candle. And here, this is what? The first is a red candle and the second one is a green candle. The twice top. It is not often to see this in the market. It does not engulf each other. It is similar, like they are similar size, just different in color, different in the owner. Sellers own one and the buyers own the other. Understand? And how is this form? This is psychology behind this. Probably we have the buyers going up in a particular direction. They are going up in the particular direction. The buyers are going up, going up, going up. And what happens? Suddenly we thought they keep going. Then the candlestick form to match their last candle. To match the last candle. And don't forget these are buyers going up, which is a green candle. Buyers. These are buyers going up, which is a green candle. So this is also what a green candle here. Then suddenly we have the formation of this red candle. What is telling us here now is the buyers are in control of the market. They are going, it's moving fine, everything is going fine, everything is going fine. And we thought it would keep going fine. And suddenly what happens? The red candle takes charge of the market. Yes, it might be the same side with this, but what happened? This is coming, and what happened? We thought it would keep going on.